Welcome back. Now it's time for our weekly energy update with Dan McTeague, President of Canadians for Affordable Energy. Take it away, Dan.
Well, thank you for that, Teresa. Final weeks and maybe even days of the fall season. And of course, as we're heading to shorter days, colder weather, it means that we can start to expect prices to go up, at least for diesel and home heating fuel, maybe even propane and natural gas. And that's simply because the United States is starting to show that its production of natural gas is starting to slip a little bit. We've been talking for some time about the aging fracking sites the United States has, and that it can't go on forever. And that means, of course, Canada will have to become a more reliable supplier in the days to come, but that may not be for a little while down the road. This week, we saw gas prices in Canada moderate by about 3 cents a litre, and that's again due to the fact that we're heading to that U.S. federal election, and all eyes are on who will win at the end of the day. One thing is very clear, though, here in Canada, we have seen the effects of September 2024 versus September 2023 impact of lower gas prices by 10 to 15 cents a litre, having that very positive effect in terms of dropping inflation and, of course, giving the Bank of Canada a little bit more room to drop interest rates, which, of course, it did. So for those out there who think gasoline prices are just about gasoline and driving from point A to point B, you better think again, because even though you live in downtown parts of the country and don't have those kind of transportation, you still have interest rates and inflation, and the economy generally pivots very much on the price of energy. Like it or not, it's not really great to be trendy, but nevertheless, not just to talk about the gas prices and why we're starting to see a bit of a decrease in inflation. A report came out by the U.S. Department of Energy, which confirms concerns that Congress had that the move by the U.S. Democratic Biden administration to release the sanctions on Iran allowed Iran to pick up an extra $100 billion and triple the amount of money it was making on oil when it had under the Trump administration for the first 2 years, making $18 billion. Obviously, a lot of that oil is going to China, but we know where a lot of that money is going. It's coming right back in terms of financing the kind of proxies that Iran has been pushing, whether that's Hezbollah or Hamas or the Houthis. It's also probably funding some of the Palestinian anti-Israel organizations around the world, including right here in Canada. But I digress. It was bad news. Perhaps it's the Biden administration, Harris administration's view that allowing Iran no longer to have sanctions and giving all that money back and allowing them to basically sell all that oil to China would somehow, provide a bit of an appeasement for that country, or would actually flood the world with more oil. Whatever the case may be, it's had the opposite effect. Yes, oil prices are remaining temporarily low, but it's also created a much more tenuous situation on the geopolitical side, for which money managers and hedgers are trying to avoid by dumbing down and short selling oil and gas. What that means for Canada is that we can continue, at least for the next week or two, to see gas prices moderate or remain lower than what one would expect given geopolitical tensions, given supply and demand. That means Vancouver could stay in the $1.75 range, while the rest of BC in the high $60s, while Alberta $1.43 to $1.46. Saskatchewan about the same at about $1.44 to $1.48 for Regina, Saskatoon in particular. And of course, Manitoba with no provincial sales tax on gasoline, roughly about $1.35 for the forthcoming week. Ontario pushing down towards $1.51, maybe down to $1.50, or up a penny or so by the weekend, but then down on Tuesday, Wednesday, and Thursday as we get closer and closer to that November 5th presidential election. Quebec will, of course, follow Ontario and the New York Harbor spot market for gasoline. So look for a net decrease of about 2 cents a litre, while Atlantic Canada, which got a 3 cent decrease, 3.5 cents this week, maybe even 4, could start to see prices move up a penny, maybe a penny and a half. But all eyes have to be focused now on diesel. We're getting into colder weather. That means that the demand for distillates is going to go up. And of course, production isn't quite there. And what this all means is that we're really living in the final days of what could be the best of all worlds for consumers. I think we're going to continue to see upward price pressure as hedgers to money managers who've invested very heavily in things like the IRA, the Inflation Reduction Act, are going to find that new administration, which I think is coming, is going to change all of that. What it really means is fasten your seatbelts. These are the best of days to take advantage of it, because starting after the second week of November, we're going to start to see prices going up. That's it for this week, Teresa. We'll talk next week.